Hello, friends, and welcome to the show, Your Real Estate Today. I'm Paul Jameson, your host, owner of the Jameson family of companies. That's Jameson Realty, Jameson Property Management, Jameson Property Investments. If you are a first-time listener and you're with us on this beautiful Saturday afternoon, you're getting a dose of real estate today. For the next hour, that's what we're here to talk about. Your home, your investment property, your mortgage. Sandy Dickinson with Cross Country Mortgages here. We're going to talk about things around your home, ways to improve your home. This is not John and Dave. This is from the real estate side. I listen to John and Dave every Saturday morning. I love those guys. They've helped me with several different things. But we're going to talk about your home, how to increase its value, how to work with your mortgage, some ideas if you're interested in selling, buying, or investing in real estate. Hey, Sandy, how are you today?
I'm good. How are you?
I am good. We are here to talk about what I learned this week. And, I do this every week. And I tell you, the other day, I was speaking to a new agent about the real estate industry. And of course, they're overwhelmed, not by just the fees that it takes to be in real estate, but they were overwhelmed by how many pieces there are in a transaction. And there's an old expression that we have that I heard from a friend, Bill Gallagher, who's the #1 instructor in North and South Carolina. He said, the only reason you get your real estate license is to be able to do the business. It's required, right? And the other is to stay out of jail. So they teach you the rules to keep you out of jail. But they don't teach you how to be in the real estate business. I know it's the same way in mortgage, right, Sandy?
Exactly. Yes.
Yeah. I mean, they don't know how to fill out a contract. They don't know how to do a CMA. They don't know how to do the things that they need to do the business. They don't know all the different aspects of the transaction, how to fiduciarily protect your client in all aspects of the transaction, but they do know the law and real estate law, and that's important. But there's so much more to that. So here we go on what did I learn this week. All right. The market is giving us options right now. We can test it, but ultimately your agent and the seller don't and can't set the market. The market seems to have a mind of its own. Buyer and buyer's demands seem to set the basic economy for what they want to buy and how many people are available to look at it and the offers that they write on it, whether it's stupid or reasonable. Your agent has to still work with the seller, or you if you're the seller, and tell you if the list price is not able to be supported by the data that is available. In a lot of cases, it's not. But still, an appraiser can squash a deal. And I'm going to talk about today common deal squashers. So I'm going to help give you some ideas as you consider selling or consider buying or consider investing. Common deal squashers. Now, I like to be very positive. As those that have known me over the last umpteen number of years doing this radio program, I am a glasses half full kind of guy. I always look for the positive things, except in traffic. I do have a problem staying positive in traffic, don't I, Sandy?
That's what I hear. I heard, though, that you were giving grace lately.
I am trying. It is a daily struggle. Grace lately and traffic is a daily struggle. Also, before we get into the deal squashers, eating out is a challenge. Who's ate out lately? Man, I swear my English teacher would have slapped me right then.
I ate it out yesterday.
Huh?
I eat it out yesterday.
You eat it out yesterday. Lack of labor is just terrible. And getting government agencies to call you back is also tough. This mandate for COVID will slow down things in new construction in many areas. You all have heard me say there's a 5.5 to 6.5 million home deficit nationally. So you'd think new construction would pick up, but the problem is supply chain, cost of goods, timing that is slowing everything down. And now it's going to be an issue related to getting permits. But, you know, our healthcare workers out there, this message is for you. You all were, during the main COVID period, our heroes. You all were there. You were on the front line. You were there to take on the risks of something that was completely unknown. And now you're being treated like zeros. And I just want you to know that we love you. We hope that people realize how foolish they're acting towards you. It's your body. It's your choice. It's your right. Even if you don't agree with me or I with you, we can agree on this. Freedom of choice is a foundation of our democracy. We fought for it. People died for it, and we should honor it. And to the healthcare folks out there, police, fire, safety, those that put their life on the line for us, our military, we honor you every day. And don't forget that we're not going to forget you. And so in real estate, you get to choose your realtor, you get to choose your mortgage person, you get to choose your house, you get to choose a lot of things. And we want people to be able to keep on choosing. And that's what I learned this week. So on that note, Sandy, how about a mortgage update if you choose?
Well, here's what I learned this week is that we have now increased our conforming loan limit. That means anything that goes conventional, Freddie Mac, Fannie Mae, non-jumbo is now at 625. So anything over 625,000 will be a jumbo loan, and that is conventional.
Ooh,
it used to be 548,250, so that's a nice jump.
That's a big jump. Why do you think that is? Is because the price of housing has gone up so much it's kind of moved with what used to be the average?
Exactly. Yes.
That's kind of cool.
Nice jump. And on top of that, as far as rates go, they are starting to head up. So get them while you can, because the inflation, the tapering, possible tapering of the government, and guess what? People are getting back to work. So we're seeing those rates go up a little bit. So take advantage of them while you can.
Yeah. You know, Sandy, in our time today, one of the things that I thought that we would talk about, not just the conventional loan limits, which is really good news, right? Is about rates, where they come from, who sets them, what different products there are, and how the rates are affected. Because I think it's kind of like Yelp, right? Rates are like Yelp. If you want to go out to a restaurant and you look at Yelp, you're going to look at the ratings, right? You're going to look for 5-star, happy. When people are looking at rates, they get on the internet and they look at rate. And whatever number looks to be the smallest is the one they go, I'll click on that, right? We're going to talk about rates, the importance of rates, how rates are affected. And I'm real excited about this. We haven't gone down this road before. So this is a great subject to help educate you on what you see versus what you get.
Sounds fun.
So here we go. We're going on an adventure. Sandy Dickinson with Cross Country, Paul Jameson, your host. And for those that want to learn about common deal squashers, you can choose to hang on. We'll be right back on the show, Your Real Estate Today, on News Talk 1110 99.3 WBT. Welcome back. Hey, it's Saturday, and we're glad you're with us on the Show You Real Estate today. Thank you so much for being with us. We know that each and every Saturday, we're blessed and honored to have you with us, and we're thankful. And if you're just tuning in, this is Your Real Estate Today. I'm Paul Jameson, your host. I own Jameson Realty, Property Management, and Property Investments here in the Charlotte region, serving North and South Carolina, offices in South Charlotte and Gaston County. And Sandy Dickinson with Cross Country Mortgage is also with me. Great friend, great partner to Jameson. And Sandy, we promised that we would get to the root of the rate today.
Okay, the root of the rate.
All right. So first question for you is kind of, let's just start at the root. Where in the world does the rate even come from?
The rates come from the secondary market. Out of my control, by the way. I look at the 10-year bond to see what it's doing, and I see that there's a trend that moves with the bond. If the yield's up, the rates are up. If the prices are up, the rates come down. As a rule, that's how it works. It gets a little complicated, but there are securities on Wall Street, and so we bundle loans and we sell them as bundles. And they're basically set with the bond, and then our secondary marketing department adds a margin to it, and then they give it to us. So it's the net bond rate plus the margin.
Okay. So it doesn't have anything to do with T-bills or anything else?
Yeah, the treasury bill, 10-year treasury
bonds.
bill,
Okay. So treasury bonds. Okay. All right. And one other thing related to that, we've had this conversation before, is unemployment. Does unemployment affect interest rates?
I would think any negative news would affect interest rates because the market reacts to negative news and positive news.
Right.
So, so if you have a lot of negative economic news, then we're going to see that people start throwing their money into bonds, which is a safer place than stocks, and then that helps us.
Right.
As far as rates, helps them go down.
Right. Okay. Because the bond rates move a little.
Right. That's right.
Okay. All right. Because a lot of times, as we've talked about, the prime rate, which is what banks and others borrow off of, so they say, is not the same as the interest rates that you're dealing with in a mortgage product.
That's right. It's a common confusion. The prime rate is what the banks will set your home equity line rates and their second mortgage rates on. That's totally different than the mortgage rates. So we don't go by the prime rate at all. So we totally go by basically the bonds and the securities that are sold for mortgages.
Right. Too bad we can't borrow on the rate that we're getting when we put our money in a savings account. What is it, like
I know.
0.00001? I'd be doing a lot of 30-year mortgages with that kind of rate. TJ's giving me a thumbs up over here too. It's like,
yeah, I'll take
I'd like
two.
to have a 30-year loan at 0.00001. I'd be all right with that.
Exactly. Yes.
Yeah, you would be driving a much older car than you have now if that were the case. Y'all would, because the banks would never make any money, right? The banks would be broke.
Right.
Yeah. So you said earlier that you take and lump all these things together into the secondary market. So who actually decides what the rate is? I mean, is it like somebody in a dark office somewhere with no windows?
Yes, exactly. We have a department, nobody gets to see them, and they watch the market all day, and they negotiate the securities, and then they set the rates, and they make commitments. So if I lock a loan, say at 3.25 or 3.5, it locks it into a commitment with that bundle. So if somebody says, oh, I'm going to let that rate expire or I'm going to cancel it, the company has to pay a fee for that. It's usually it's called a pair-off fee, about 1.25%. So when people ask me, hey, if the rates go down after I lock, do I get the lower rate? Well, I could probably negotiate it if they go down quite a bit, but I have to cover that pair-off fee and then give you a rate. So it's not going to be the bottom rate. And right now that's kind of a moot point because that's probably not going to happen. We're not in that market now.
Yeah, I didn't know that. I didn't know that if you let a rate lock expire, that there's consequences to the loan.
You don't ever want to let them expire because it's going to cost you more. It's going to be worst case on the rate and you're going to have to cover that fee.
Is it when it expires, does that fee depend, like you can extend a lock, right? You can extend a lock for, I mean, I had to do that recently when we bought our home, right? I had to extend it. What was it, like 5 days or?
A few days, yeah.
Yeah.
So a lock extension will be way cheaper than letting it expire and relocking. Now, our company, if you let it expire and say you're running into an issue like a separation agreement or there's a property lien problem or something, if you wait 30 days, then I can lock you at market again. It's just it's a rule that the company put in. Some are 45 days, some are 60. We're only 30 days.
Oh, okay. So they forgive you after 30 days and are nice to you again. Should I not have said that?
Well, you don't know what it's going to be in 30 days. In this market, it could be anything.
They could go up, definitely. More than likely.
Yeah, they've been going up
more than likely. Yeah, for sure. All right. Does the lower consumer confidence right now play anything into the rates? You know, it's at the lowest time and it's at the lowest it's ever been in history right now.
Yeah, and rates have been really low because people are scared and now they're more scared to put money in the stock market. They'll be throwing money into the bond market. Technically, that should improve our rates, but I don't know that that's happening right now. So typically any negative economic news will have people pulling money out of the stock market and throwing it into bonds. I'm thinking they're keeping it on the sidelines right now. I don't know. The yield it tends to be up pretty high.
Right. Well, okay. So I don't know if this is considered negative or positive. So the lack of employment right now has caused a rise in salaries and income. Does that affect rates?
I would say yes, because of inflation.
Oh, okay. So rates go up then?
Rates go up during inflation, yes.
Yeah. Okay. Okay. Because what's interesting to me as a sidebar is, you know, our home market has gone up in so far this year and all of last year, about 28%. So if you have a home that was worth 100,000, it is now worth 128,000. My point. But interest rates being so low, that increase has not really had an impact because salaries have gone up, number one, savings has gone up, number two, but rates have stayed down. So that higher, more expensive home, there's less of a feeling that you're paying more. Does that make sense?
Right. Well, and keep in mind, the government has been tossing money and buying bonds like crazy to keep the rates down.
Yes.
At some point, they're going to quit doing that. And I think that point is getting pretty darn close because they can't keep doing that forever and spending all the other money that they're spending. So that's why now I think the tolerance is running out and the inflation is causing them to have to push those rates up.
Okay, well, when we come back with Sandy, we're going to talk about trends towards easier rules and 100% financing. Been there before, sound familiar? And then I'm going to go on talking about some squashing. What can squash a home deal? We'll be back to show you real estate today. And Paul Jameson with Sandy Dickinson on News Talk 1110 99.3 WBT. Don't go anywhere. Happy Saturday. We're back to show you real estate today. Paul Jameson here with the Jameson Companies, Realty, Property Management, and Property Investments with Sandy Dickinson with Cross Country Mortgage. So, as promised at the break, we're going to do our best to talk about what I call the deal squashers. The deal squashers are things that squash the deal. So I want to make sure that you hear from me. I've got, let's see, 10 things. If I can get to all 10, we'll try. I don't know that I've ever gotten through a complete list in the show before, but we're going to do our best. Don't laugh, Sandy. That are things that can get in the way of a successful real estate deal. All right, TJ's in the studio also. So would you care to take, Sandy and TJ, an educated guess or uneducated guess, if you choose, what I think is the number one deal squasher?
I'll go with
Number
uneducated
one.
guess.
Can I be vague, like inspections?
Sure. Okay, Sandy says inspections. TJ, what do you say?
I'm gonna go with people trying to keep the furniture.
Both very good answers. All right. Here is I'll save my number one. I'm going to go to number two.
What?
Number one will come. All right, number one will come. So TJ said asking for the furniture. Sandy said inspections. Okay. Number two is a kind of Sandy, but not, she was too vague. But number two is the crawl space. The crawl space. And you've heard me talk to Marty about it many times. It still kills a big chunk of the deals. I went into one yesterday over in the other side of town in a house built in 1940. The band sill, one of the band sills, there's 3 boards held together. One of them completely gone. Termite holes, powder post beetles. It was bad. And what's so funny is the guy said, well, I haven't been in there in years. Well, I was underneath there. There was so much of their stuff underneath there. They had to be underneath there at least once or twice a week. There was furniture, bikes, toys, mowers, in the crawl space. Don't tell me you don't go in there when all your stuff's in there. You go in there and it's bad in there. All right. Number three, overzealous inspectors is a deal killer. Most of them, not Preston Sandlin and Home Inspection Carolina, thankfully. They CYA themselves so much they scare the living out of everyone. If a house does not meet today's code, that's not a bad thing unless it's a brand new house, right? What is code then is still okay. Remember, it's not a new house, okay? All right, number 4. I feel like I want to do the Jetsons. You need to get me the Jetsons, or no, I guess not the Jetsons. It's what was the top 10? Number 10. Not Casey Kasem. Yeah, there we go. Casey. Is he still alive?
I don't think so.
I think he's done. Okay. Well, he was cool. All right. Appraisals. Sandy. Overzealous need to be a home. Appraisals, I know. Appraisers overzealous need to be a home inspector or a refusal to examine the market conditions to adjust a price upward. Now, I would not want an appraiser's job for anything, that's for sure. But they need to stop acting like home inspectors and study the data. Stick in your lane and understand what direction the market is driving toward, and the price adjust accordingly. Now, most of the appraisers that I deal with and that are on Sandy's panel, they don't do that. That's what I love. That's another reason why it's important to get your lender. You want appraisers that have experience where you're wanting to buy. Sandy, is that not like a big deal?
It's a huge deal. Like I don't let them go off our panel unless it's an emergency. So our appraisal company has to stick with our panel of appraisals that we handpicked.
Yes, it is a big, big deal. And appraisers, I feel bad for you right now. And I talk to a lot of you, and I'm just telling you, you know, it is a moving target right now, but you know, you got to look at what's going on out there. All right. And most of you do. All right. Number 5. I'm not going to do the singing thing anymore. I quit. It's,
The thingy thing? What?
the singing thing.
Oh, okay.
Okay. Online lenders, they are the worst. Clients chase a false rate and then lender goes dark. For many, it becomes too late. Sandy, you know it's a common trap. Don't get caught. Care to comment?
Yeah, so a lot of times you go in there and they're just there to capture your information. And they put rates out there with points, and people don't realize about what points are or how they affect the rate. And or a lot of times they, you know, there's a lot of pieces to giving you a rate, credit score, loan to value, type of property, and everything. So if you just put something generic in, you're probably not going to get a real rate.
Yeah, that's true. That's very true. All right. Number 6. What can squash a deal? Out of town buyers think they come to the South with cash and can get a deal. Not true. I see it all the time from the Midwest. They think it's time to negotiate. It's a fool's errand until they get bless your hearted a few times. They finally get it, but they lose out on some potential nice homes in the meantime. I can't tell. This happened to me last week. This guy came from NYC with a bunch of CASH, and he said he's going to NEGOTIATE. And we said NO. We said, go back to NYC. Bless your heart. So anyway, that's what happened. And that still happens. And the realtors try to tell them, but you know, if that happened to their house, if somebody up there came to them and said, you know what, you want 500,000 for that house, I'll give you 400,000. They wouldn't be doing bless your heart. They'd be doing something else with some hand signals. They'd be letting them know they're number one. So don't do to us what we're not stupid down here. Don't act like we are, because we're not. All right. Number 7. Still, TJ, the stuff. Get off the wagon of the stuff in your offers. Buy the house, not the stuff. I know it's hard to get a couch right now, but don't put it in your offer. All right. Ask later when the transaction is underway. How long did you wait for your couch, Sandy?
I think I only waited 3 months for my couch. Now my bed is another story.
Yeah. What has it been? Like 6 months?
Since
At
March.
least? Oh my gosh.
That's 8 months.
Yeah, look. Don't ask for the stuff. TJ is exactly right. People are still, I got an offer the other day. I mean, don't ask for the dog, don't ask for the car, don't ask for the cat.
And your firstborn.
And I told her, yeah, that's right. Random. So
Have that.
he's 40 years old now. I guess you can have him. But But you know, it's so funny to see some of the things in the offer. I did a show a while ago where somebody said the seller said that the dog had to stay because they wanted it to die in the house with the buyer. But I digress. We got more to show you real estate today, and I will give you number one thing that squashes a deal. And Sandy Dickinson is going to talk more about rates on the Show You Real Estate today here on News Talk 1110 99.3 WBT. Stay right there. Hello, friends. Welcome back to the Show You Real Estate today. Paul Jameson here with Jameson Realty, Jameson Property Management, and Property Investment here with Sandy Dickinson with Cross Country Mortgage. Sandy, if someone's interested in refinancing or purchasing a home and they want to talk with you, how do they get you?
They call my cell at 704-577-0144.
Sandy Dickinson, Cross Country Mortgage, 704-577-0144. Now, before the break, I was trying to get through my list of top 10 deal squashers. I'm going to do that for the very first time. I'm going to make it through this list, and then Sandy is going to answer the question for you around a rate. Do the trends towards these easier rules or getting 100% financing affect rates and the rate itself on some of those products? So we're going to talk about that, and then we're going to talk about construction, and we're going to talk about refining if you're already in the house. Is it simpler? So we're going to talk about, well, obviously you don't refi if you're not already in the house. So we're going to talk about refis for a minute. All right, so I'm going to go fast, Sandy. Watch me go fast. Here we go.
Okay, go.
All right. Number 8 of what can squash a deal. A rookie agent. Not knowing how to navigate the process and taking the buyer down the wrong path of expectation. New agents, you better get yourself a mentor. I am seeing contracts filled out wrong and really poor guidance given to potential buyers and sellers. We are a prideful people, and no one wants to appear inexperienced or wrong to their client. But in this business, if you don't know, find somebody to ask. I still do, and I've been at it a long time. If I don't know an answer, I'm going to go get one. I don't fake it till I make it. Number 9, seller cover-up. Some sellers that's a reason to squash a deal. Some sellers are covering up material issues, and what is covered up at some point will get uncovered. Don't take the risk. When you check no representation on the disclosure, you should have a real good reason to check it. If you know about an issue, it'll bite you. Guarantee it. Number 10. I still haven't done number 1. Number 10, buyers and sellers understanding what to expect. One big thing that squashes a deal is buyers and sellers not understanding what to expect in the process, what a good offer looks like, irregardless of price, what the tone is for the transaction and how to set it. Tone can break a deal. Initial offers can break a deal. It's an indicator of what's to come. So layer expectations to your buyers and sellers, even if they come from down yonder. We want to make sure they understand in this market what tone, expectations, and the process is going to look like from start to finish. A lot of times people get into places they never even knew they could because they didn't and weren't told what to expect. All right. So the number 1 reason why most deals get squashed is overpriced listings. Greed. And agents not setting clear expectations. Still, in this crazy market, you know, we don't always know what that ultimate end purchase price is going to be. But if you set a price that is below or at market value based on the data that you have, the market will then drive that price up. It will tell you. But also, Don't forget, like we talked before about appraisals. All right, Sandy, I did pretty good there.
Yep, you got through it.
Got through the list. All right. Do you think the trends towards easier rules to get a loan or 100% financing will affect the rates
Yes,
in a good way or a bad way?
a bad way. More
Okay.
more risk, more rate. That's what I'm gonna say. Those are riskier loans. They're gonna cost more money.
Okay. All right. We're going into some rapid fire that you can extend the answer as long as you like. Earlier,
Okay.
you heard me talk about new construction. And ultimately, right now, it takes longer to get a house built, which means those construction to perm loans are longer than they're designed initially to be.
Mm-hmm.
What's that going to do to those rates? And if somebody gets into a logistical problem, what do they do in a construction to perm?
Well, we have a program where it's basically a 9-month rate lock up front. And we know that sometimes things go over. So we have an extension fee of, I think it's like 1% if it goes, and we give them another 60 days automatic. And then after that is pretty much a negotiation if things haven't worked out. But I think that's pretty typical. I think it's more, the rate probably doesn't change, but there's a lot of fees involved with most construction perm products.
Yeah. Okay. Because these days, like I priced getting a garage door, it was 18 weeks.
Wow.
Or
Yeah.
14 to 18 weeks to be
You have to
fair.
have a good builder that thinks ahead. That's for sure.
Oh, I know. I'm building some houses right now. It's interesting. All right. So I'm going to jump ahead a little bit. Refis, are they simpler than a purchase? If so, how?
Typically they are. The no cash out, the rate term refis are typically simpler because a lot of times we don't have to have appraisals. We have a little bit less documentation. FHA and VA both have streamlined refinances where we don't even have to put income in. So those are all super easy. We don't get appraisals on those either. So those are pretty easy loans. Cash out refis are probably similar to purchases, and the rate's a little higher on those because they're riskier.
Mm-hmm. Yeah. What, you know, if somebody takes out money, does that cash out refi?
Mm-hmm.
How much can they typically get out?
Typically, on a conventional product, 80% of the value.
Okay.
On FHA and VA, I think it's 85%.
Oh,
Maybe 90 on VA.
okay. A lot of people made a lot of money this year in housing.
Yeah, a
Hmm.
lot of people doing cash out refis,
Is
paying
it
off
easier?
debt.
Is it easier to go back to your old lender, or is it the same as starting a new lender on your refi?
Well, people get confused and they try to call the company that is servicing their loan versus their old lender. So if you have a relationship and if you had a good experience, then yeah, reach out to your old lender. I don't think typically 65% of people have a bad mortgage experience. Let's just face it. So you want to have somebody you can see face to face if you need to. You can get them on the phone, someone that keeps you updated with the process so that you know that you can reach somebody if you have questions or if you don't, so you don't feel left out in the cold.
Yeah. Online, speaking of online lenders, their rates, like we talked about earlier, are a trap, right?
Depends on the lender. Some of them spend so much in advertising, they charge more. Some of them pay their loan officers and their staff a lot less, so they charge less. And that's usually where things go bad because you don't have the experience and they'll put you into something that they can't really give you. And then the rates have gone up and then you're stuck with nothing. Basically, you have to start all over.
Yeah. Well, again, Sandy, as we wrap up the show today, this is a good time to refi or to buy right now because rates are still pretty decent. Yes.
Yeah, they are.
And how do they get you one more time?
My mobile phone, 704-577-0144.
And if you'd like to talk to us at Jameson Realty or Property Management or Property Investments, we'd love to talk to you. So here's the very best way to get us. We actually answer the phone. You can call us at 704-846-DONE, 704-846-3663. You can jump on the web at myjamesonhomes.com and you can contact us that way. But we'd love to hear from you. We're working with buyers, sellers, and investors or individual investors that need property management. We're here. So God bless. Thank you again for spending Saturday with us. And we'll be here next week too, to show your real estate today here on News Talk 1110 99.3 WBT.